Hello everyone, welcome back to another Lumley trading live stream. Markets have just opened. The key watch is going to be Meta today. We are up 8% off their earnings. Earnings per share came in at 2.98. This was compared to the estimates of 2.91. Now that's not why we're gapping up so much. The main reason is the amount of price target increases we saw come out after that release. We will quickly go through just how many there were. Again, if you're following the YouTube channel, we did post it as a community post. But really, here, I'll show you what we're looking at. These were all the ones that have... oh no, sorry, that's the earnings. These were all the names that boosted or increased their price target over on Meta. So massive number of increases over on Meta. So yeah, that's firstly could be one of those big catalysts that we're paying attention to. Meta, very rarely do we see that many come out. Now we will quickly run through the earnings. So again, Meta started strong, exceeding analyst expectations with impressive EPS of 2.98, surpassed the estimates of 2.91. Revenues was also higher, hitting 32 billion dead on compared to the estimates of 31.08 billion. So that's going to be the key thing. They did also project future revenue to be in the range of 32 to 34.5 billion, and that was an increase from their previous estimates of 31.18. So again, basically across the board they were strong. Earnings per share beat, revenue beat, and then also future forecast beat. That's always going to be impressive when you see something like that, and again, that's always going to lead to an upside move. Especially that future forecast is going to be one of the main things to be paying attention to. Just to open up then the stream, so I've got the chat and everything like that, and then we'll continue to go through these names because again there is a lot of them. Let me move the Discord over. Actually, while it's here, we can quickly see what earnings we have tonight, just as a heads up. So obviously this morning as well, we did have McDonald's, we had MasterCard, we had ABBV. They were the main ones I was paying attention to. And after hours, we had Meta, Chipotle, and eBay, which were the ones I was paying attention to last night. So after hours today, we do have Ford, we got Intel, we got Roku, we got T-Mobile, and they're probably the four I'm paying attention to for after hours tonight. So let me just quickly make sure the stream has been posted in the Discord, and again, then we can run through the rest of these earnings, because again, there is a lot to kind of go through. So, going then on to eBay. eBay had EPS of $1.03. This beat their estimates by 4 cents. So again, they were forecasted at 99 cents. Their revenue reached 2.5 billion, but that's actually below the estimates of 2.51 billion, so a $10 million miss. So overall, still quite strong. We can kind of see, I guess, what they're doing right now. So eBay did actually drop about 8% off this news. Then you have Chipotle Mexican Grill. That ticker is CMG. They're also down about 7%. Now, their adjusted earnings per share was $12.65. So this did actually beat the estimates by 36 cents. We just had an MU alert go off, so we'll check that out in a second. The revenue was also 2.5 billion, but that was below the estimates of 2.5. So basically exactly what we saw on eBay. The beats on the EPS, but missed on the revenue side. Now, again, this morning we had MasterCard earnings per share of $2.89, beat the estimates of $2.83. Revenue was also a beat at 6.3 billion compared to the estimates of 6.2 billion. Then going on to McDonald's, earnings per share beat again at $3.15 compared to the forecast of 2.79. And revenue also beat, coming in at 6.5 billion compared to the estimates of 6.29 billion. Going on to Southwest Airlines, they actually missed. So they were earnings per share of $1.09. This missed the forecast by a cent, as they were forecasted at $1.10. Their revenue did, though, however, beat expectations, came in at 7.04 billion compared to the estimates of $7 billion. Comcast as well, so that's ticker CMCSA, came out at $1.13, which was actually quite a strong beat. They were estimated at 97 cents, so quite a strong beat on that front. Their revenue also slightly beat, coming in at 30.5 billion compared to the expectation of 30.2 billion. I think they're going to be the main names we care about, maybe Hershey as well. Hershey's came in at $2.01 earnings per share. That beat the estimates of $1.91, and revenue basically came out in line, missed by 10 million, as it came in at 2.49 billion compared to the estimates of 2.5 billion. So that's going to be those key earnings from both after hours yesterday and pre-markets today. So that should be all good. Again, we do have the ECB conference going on right now as well. So we will call out the key parts that are coming out as we go. We can actually even have the conference playing. Let me just quickly get a link to it, and then we can actually, have the conference playing, I guess, live instead of having a bit of CNBC. So I'm just looking out for the link. It's not there, so let me see. I can probably just get it from here, actually. As well, just while this conference is going on as well, quite clear if you're looking at the euro dollar, euro is really weak of this news, so it's going to be strength in the dollar. SPY is gapped up about 0.8%, so holding that FOMC move to the upside. Again, Meta up about 7.5% as of right now. eBay and Chipotle down about 7.5%. McDonald's is also up about 1.5% off their earnings news.
It's very,
okay, yeah, we have the conference, so here we go. We'll play this in the corner.
Described. We say the annual growth rate of lending continued to decrease in June, falling to 3% for firms and 1.7% for households, with annualized growth rate of 0%, completely flat, and minus 0.2% in the second quarter, respectively. So,
just trying to sort out these charts so you're able to see the key things still.
Very mildly growth year on year, but we're seeing a decline in the last quarter, and the same holds for both corporates and households.
There we go.
So yes, of course, this is one of the.
So there we go. We've got the conference on.
Of transmission that we have seen discussed, and the fall in demand is also obvious, particularly on the part of corporates. A bit less so for households, but on the part of corporates, absolutely, absolutely. Yeah.
Thank you. And this brings our press conference to the end. We wish you a very nice and happy summer.
Coming into the end anyway.
See you back here for our next press conference on the 14th of September. Thank you very much.
Oh, there we go. I guess we got the end of it. We'll actually then summarize the key things that went through on that conference. So let me quickly grab the key things and that went through. So there is a lot to go through. There's actually a ton. So anyway, we have the ECB's President Lagarde. The near-term outlook has deteriorated. Manufacturing is held down also by weak external demand. Services are more resilient and momentum is slowing. The labour market remains robust. The economy is set to remain weak in the short term. Government should roll back support measures. Drivers of inflation are changing. Domestic price pressures becoming important drivers of inflation. Underlying inflation remains high overall. Some long-term inflation indicates elevated and need to be monitored closely. The economic and inflation outlook highly uncertain. That's probably going to be one of the key things and why we're seeing the euro sell off so much. It's going to be off that key statement. The economic and inflation outlook is highly uncertain. Again, it's always the uncertainty that's going to drive the market. Food and energy prices, a potential upside risk of inflation. Russia's withdrawal from the Black Sea grain deal could boost inflation. Funding has become more expensive for banks. Large telco repayments in June went smoothly. The decision was unanimous. The wording change in the statement was not random or irrelevant. That is also quite key to note then. So yeah, when she was speaking, they did differ some part from the statement, saying that's not random or irrelevant. So again, that was a purposeful change. We are open-minded on September and beyond. We are not in the domain of forward guidance. We might hike, we might hold. No, that means there's no announcements of a drop, which I mean is to be expected. The ECB may vary from one meeting to another. Minimum reserve ramifications rate cut has no impact on our policy stance. We have not discussed balance sheets cuts. We are starting to see the transformation of policy into the economy. We are not going to cut in September. September could be a hike or could be a pause. A September pause would not necessarily be for an extended time. Wage increases are definitely playing a role in driving inflation, not seeing signs of strengthening second round effects. There will be no trade-off between rates and quantitative tightening. Do we have more ground to cover? At this point, I wouldn't say so. So that is basically the key summary. That is the key statements of that about an hour or so conference. Also just saying, not related to the ECB conference. Again, that summarizes everything from that. We did see some news out of China, though. China to push for tech-related loans to maintain fast growth. And I think that'll be about it. Also, one thing to note with the ticker OXY, you probably heard of this name a few times. It's one Warren Buffett keeps adding to. So about every quarter or so, when he does the filings, you tend to see this stock announced, and it gets a bit of a move off the news that he's bought more. But they have just announced a selected Amazon Web Services as its preferred cloud provider. So we probably actually won't see a massive move off anything like that. If I move that back to how it was, yeah, we're down about 0.5% off that news. So it'll bring some volume to the stock, but again, not a massive driver. Same on the Amazon side. Shouldn't really be. I don't imagine that's the reason for this gap. I imagine that's more just to do with the market strength and meta strength overall. I don't think that's related to the OXY news.
But I detect a level of some optimism by you that there could be a return after Isuto was.
When it comes to merger and acquisition activity, I'm hearing a much higher level of conversation, which could translate into potentially at least some transactions being announced. Let's call it fall, end of the year. That said,
that's very important.
I
if
always
you're Goldman
caution
Sachs.
people, just because they're talking doesn't mean they're going to actually decide to pull the trigger. We should pause for a moment and just note the performance of the NASDAQ in particular this morning. It is up over 1.5%. That's bringing its gains for the year, by the way, to 37+%. Obviously being driven in part by Meta shares.
Also seeing the China's onshore yen has falls 0.5% to the dollar.
Alphabet adding to the gains we saw yesterday after earnings. It's up another 2+%. And Nvidia, which we talk about so often as being the beneficiary of so many trends.
And did you notice, by the way, how Bill McDermott immediately tried to work in Jensen Huang because of the partnership with them and Accenture?
Also tomorrow, seeing that we actually have the Procter & Gamble earnings, I think this will be a key watch. Going to be my main watch for tomorrow's earnings. Again, obviously all pre-market, no after hours earnings tomorrow.
Like it. He was just astonished that people weren't picking up on it. And then ChatGPT. And of course, he was friends with Sam from a long time. Remember, he is the genius behind all of this. And there are...
Also, just to go through the economic calendar, most things have come out. They were all pre-market at 8:30. 10 a.m. we have the University of Michigan confidence and the University of Michigan 1 to 5 year inflation expectations. And at 1 p.m. we have the Baker Hughes weekly rig count. Doesn't usually make any significant move. So really the news coming out today isn't going to be key, which is, I guess, kind of a good thing. Oh, sorry, actually, that's for tomorrow. Damn. Yeah, tomorrow we have the PCE, which will be a key opportunity. But after the open, the news coming out is pretty lackluster. For today, we have 10 a.m. pending home sales. That's month-on-month for June. weekly nat gas data. That's what we like to trade, so we'll be watching that. We also have the Kansas City Fed manufacturing for July that comes out at 11 a.m. and at 1 p.m. we have the bond auction, the US Treasuries to sell $35 billion in 7-year notes.
It's so funny that you come back to this tiny little business every time you talk about Apple. Namely, like the stuff that literally means nothing for them.
Eddie Q.
We shouldn't spend time on it.
Eddie
Apple is
Q.
up. Why?
Eddie
It's up
Q.
because of, I don't know, AI, and because they're going to sell
Vision
more
Pro's
phones.
is much better because 15's looking
Nobody
good.
cares about the
15's
Vision
looking good
Pro.
Because
It's not
because
gonna
it's the
move the
greatest
needle.
technology company with the greatest consumer, the greatest consumer ratings. And I want to make a statement right now. Eddie Q getting messy for MLS, that is a coup, the likes of which if we had any linear TV company talking about it, it was all we talk about. Hijacked.
Well, that's because it would actually
so you know
move the needle
stars
in a
in
linear
Hijack?
company because they all have tiny market values.
You like interest more than anyone else in the world. Ever since Stringer Bell.
Stringer Bell on The Wire is one of the greats.
I tell you,
very happy. My son is watching The Wire now. He's totally into it.
His programming, so are my kids. Eddie Q is doing things that are just, they're existentially fabulous.
All right, let's move on to some of the names.
Share rate actually keeping strong after the earnings yesterday, still up 7.5%. We still have that key level at $2.23. So if we continue up, could be paying attention to that.
So you're going to be on deck 14. I, of course, will be in the haven up the top. But this is really, my daughter was on the 12th floor when she did a Norwegian cruise line. She said it was not as
Southwest, though, is
portholes
down,
weren't as
Jim.
important.
Obviously, Gary Kelly no longer in charge there.
Yeah. Okay.
Tough. You have nothing to say on that one, do you? All right.
No, not right now.
All right, you move on.
Dave,
Go ahead,
can we
you're
talk about
entitled.
Amazon and the idea that chassis getting religion, they don't want to spend a fortune on food. You know, there's been this Amazon conference that I did not get invited to. I don't know how you felt about that. It's in New York. I didn't get invited.
Also, OSTK released their earnings. We're popping 22% off this news. The weird thing is, you go back to the previous 2 quarters, they were both positive earnings per share. This quarter is actually negative 2 cents, but we're moving up off this news. Bit strange there.
Know about
Would
the
you go
Amazon
anyway?
thing that
All
I
right,
wasn't
now
invited to.
Let's talk about Honeywell down 8, okay? Now, this quarter was actually quite good, but it's the first quarter from Vimal Kapoor. People did not like the fact he kind of kept the numbers the same. I'm going to tell you, when this stock is at this is a travel trust stock for a long time. When the stock's at 195, 196, you're going to start buying it, okay? It's pretty simple. Because it wasn't that bad a quarter, and yet people are just freaking out. Because people don't understand how it trades.
Every quarter that's every time the stock is down and you'd say it's not a bad quarter. You're like,
It's great.
well, you got anything bad to say about anything? Come on, give me something.
Estee Lauder.
Give me something
It's
negative.
horrendous.
What?
Estee Lauder's been horrendous.
Okay.
Disney's been horrible.
Yeah. Disney's
Just
been-
amazing.
Yeah.
Microsoft yesterday was down 15. I told people in the trust to be able to buy it right now. It's coming right back. People will now forget what Amy Hood said. But Honeywell, look, it's a new CEO. Some people think it's a reset. I could go over. I'll give you the Honeywell so that people don't understand. People understand. I actually do work. I know that people who are selling it, there's kind of, I don't know what kind of work they do, but okay. So here's what it is. They beat earnings per share. They had higher.
Also, key level on Meta is going to be that 327.58.
Raised the revenue. They had one weakness division, which is the softness due in the warehouse automation. Aero's cooking on all cylinders. It's the best Aero franchise with the greatest gross margin. So go sell it. Go sell it. Go knock yourself out. Go do stupid. Go do it. I don't care.
It does remind me of earlier in the week and the drubbing that RTX took.
RTX. But the problem is RTX is, the powdered metal. They're pulling things.
We know what.
Also seeing a negative hit for the Eurozone banks from ECB's new policy of minimum reserve estimates at around 6 billion euros. Also shares of US chip makers up after the LAM research Q1 sales forecast beats estimates. Shares of Broadcom up 1.2%. Micron Technology up just under 6%. Marvel Technology, that's the ticker MRVL, is up 3%. And Applied Materials up 5.8%. Also, another thing out of the Eurozone government bond yields extend for after the ECB's press conference. German 10-year yields are now down 8 basis points at 2.38%. Also seeing the 2-year bond yields down 9 basis points at 3.18%.
Where they can be bought. They like Costco and Walmart because they're good for the consumer. And basically what they like is anything in the Nas.
Yeah. 37% is the gain on the NASDAQ at
By
this moment for
Microsoft,
the year.
Amy Hood has been.
And the S&P is approaching a 20% gain. So it has been a good year, to say the least, for our broad markets
ABBV had a good quarter,
so
David.
far.
And that's Rimbo.
It's good to know, Jim. Thank you. Before we head to break, let's give you a quick look at the bond market as well. Of course, we're a day
As soon as
out
we've done
from
this roundup on the
raising
bond
rates by
market, I do want to
25
cover
basis
something
points.
interesting.
Key question, of course, continues to be what's next? Higher for longer? Is that possible? Well, there you see the 2-year at 4.891 and the 10, 3.905%. We're back right after this.
Okay, so the thing I wanted to cover is the difference between actually the MasterCard and the Visa earnings. So, net profits at 2.8 billion on MasterCard, but they're paying $0.9 billion in tax. Now, go over to Visa, they got $4.2 billion in profit, but they're only paying an extra 100 million in tax, which quite a crazy difference. Just thought that was interesting, stood out. And I guess usually why why Visa is the outperformer. Yeah, because just seeing as well, client incentives as well. Visa are spending 3.2 billion. So yeah, this is actually quite interesting. I never really looked into these parts of the earnings, but I guess while we're on the break, we can look a bit more into it. The incentives, MasterCard are actually spending an extra 500 million compared to Visa, even though, well, their net profits, their revenues and everything are a lot smaller. Again, net revenues at 8.1 billion on Visa, but they're only coming in at 6.3 on MasterCard. Operating expenses as well, 2.6 on the MasterCard side, and only 2.9 on Visa. So it just seems like Visa is a lot more optimized. Again, just looking more at the long term, just interesting things to kind of look into. And I think seeing it from a visual standpoint can usually be a lot easier. So it doesn't seem like we're dropping any new news. Obviously, after that ECB conference, that's going to be the big thing for the day. Not going to move the US market massive, more going to be on the currencies and the bond side of things. Obviously, the stock market is still quite strong after the FOMC yesterday. We're up basically where we opened, up at 0.8% green for the day. Again, Meta's gapped up now about 8% on the day, basically kind of staying flat. Ideally, I want to see Meta continue to that upside. We got that key level at 327, so potentially looking for a trade on that. Again, eBay and Chipotle staying near those lows. Chipotle down to just under 9%, eBay down just under 8%. None though are really near that key levels. That's the problem I'm seeing with this earnings season, is not too many stocks are coming into key levels after they've been released, which is making it a bit slower. Again, big drop in the VIX as well, back below $13, currently sitting at 12.95. So a big or relatively big move from that front. Again, if you guys have any stocks you're paying attention to or you want analyzed, throw it in the comments and obviously we can go through them. Also just updated how these now show at the bottom. So just so you know, we got the SPY here on the 5-minute, and then these other charts we just have on a 5-day, 1-hour chart. Just because I think it can be easier to see, like with these, we're not day trading these, they're not going to be as key. So it's just easier to see kind of how they're moving in a bit of a longer term perspective. So let me know if you like that change.
Southwest is down. eBay also
Hot Chipotle right here.
There.
Hot Chipotle right here.
Almost all of these earnings related and down on the session so far. We're back after this.
Okay, just going to get some music as well, because I guess no one's wanting any stocks analyzed. There's not too much go through. Again, at the beginning of the video or the beginning of the stream, we did run through all the earnings. Went through all of that. Again, the main watch is going to be Meta for the day anyway. So I guess it's more just watching how we start to react off this. Just looking through playlists.
driving all night. I'll be your home when you're feeling right. You're not alone when I'm by your side. Take me home, baby, one last time. I'll be your home when you're feeling right.
Also, just wanted to note one thing again from yesterday when we were streaming the FOMC live, was that this is a trade plan we talk about every single FOMC. So these are the options from yesterday. Again, they're just 0 data expiration, SPXs, the 4,555 strikes. Again, we cover this all in the stream, but we do see this trade plan time and time again. Wait, so here is the actual 2 o'clock release, the statement, and then from around 1/2 you get the conference reactions. This is normally what we're paying attention to more. Again, the statement usually comes out as expected. Very rare that we get a big move or a move that holds off that. So instead, we're waiting for that conference. What you normally see is a big move in one direction, and a lot of times you get that fade. So that's why I look to trade that same plan. For example, the calls went up because obviously the market went off in the initial release. I was buying into these puts because the puts get cheap. If it continues to against you, obviously they're long options. All you can do is lose 100% of what you put in, but these can move hundreds and hundreds of percent. If you got in at this bottom, sold at that top, obviously you're never going to catch that kind of move. But in this case, they did move about 1,000%. We're 740%. So crazy moves. Just wanted to point that out while we were on that ad break.
Kind of reminds me of Eaton, these companies that have been forgotten. They're yesteryear. They know how to manage things. And I just want to applaud them. I want to applaud them, General Dynamics yesterday. This is the kind of thing that people are missing. American industrial companies that are crushing it.
All right, what do you have on the big program this evening?
Okay, so here's one that's just crushing it. Otis Elevator. And that's Judy Marks, who's doing a remarkable job. Now stock's down today, but stock has been at 52-week high. It's up, just consistent up since she was spun off from RTX. And then AGCO, and David, that's really more feed the world, but I do always like to keep up with it because they really understand the problems with Ukraine. He's the guy who told me that 13% of the world's calories are bottled up in Ukraine, which is one of the reasons why food's so intractable. And once again, the reason I think you'll like it is it's a reverse head and shoulders better.
It's a reverse head and shoulders?
Yeah, which I know happens to be what you
missed that. Yeah, I have. Jim, have a great rest of the day.
Thank you. You
See
too.
you over there a little later.
Absolutely.
At your post for Mad Money.
Thank you.
Jim
And David,
Cramer,
Royal
everybody.
Caribbean.
Royal Caribbean.
You and I. What do you say?
Nah, it's
14th deck.
Never gonna happen.
Why not?
Because you know that it won't happen.
All right.
Not that I wouldn't want it to. We got a lot more after the break on, of course, that big earnings report from Meta. Stock up 8%. CFO also joining our network later.
And I can fight the fire when I'm dreaming. We could stare at the stars and start believing. I can make you love me, I'm trying. I'm trying this whole life to see.
Just looking like the euro is still continuing to get weak, potentially going to push back down and try and break those lows from the conference. Also, Meta holding up well. The market, though, however, stock market or the S&P starting to pull back. Also, we just had the US home sales come out. So US pending home sales index came in at plus 0.3%. We're also seeing the... One second, let me just get this up on full screen. There we go. Yeah, US pending home sales index came in at plus 0.3% to 67.8. You also have the US pending home sales down 15.6% from June 2022. So that's at 10 o'clock news. That's really the only thing we're looking at news-wise. Doesn't tend to have a massive effect on the overall market. Can sometimes have an effect on the REIT. So we're just seeing as well, the 8 biggest US banks faced a 19% boost in capital requirements. So I want to see how some of the bigger banks like a JPM starts moving off this news.
Which we'll get to, and a lot of other components that are also having very strong days.
Yep. 30 minutes into the trading session here, the 3 big movers are watching for you. Meta, as David had mentioned, one of the top gainers on the S&P 500, beating estimates, raising guidance, and adding to big gains on the year as well. We will break down those numbers in just a moment. Chipotle, meantime, headed in the opposite direction, also beating estimates, but rising food costs and inflation warnings taking a bite there. That stock is down 9%. And finally, watch NBC Universal parent company Comcast today. Higher prices offsetting a continued slowdown in its broadband business, and subscribers for its streaming service Peacock doubling year on year. Shares are higher by 8%.
We do have pending home sales out just a few moments ago, and Diana Olick has those numbers for us. Diana.
Well, David, pending home sales rose for the first time in 3 months in June, but don't get too excited. Up just 0.3% month-to-month. Sales were down 15.6% year-over-year. Now, these numbers are counted by signed contracts, not closings. So that's people out shopping in June and putting down deposits, and that's when mortgage rates were at the higher end of their recent range, shooting over 7% at the end of May on the 30-year fixed, and then holding just below 7 for most of June. Rates are still right around 7 today. Supply continues to be the issue, with new listings down nearly 26% from a year ago. Total inventory at the end of June was down about 14% year over year. Regionally, sales were strongest in the Midwest. Interesting, because that's where we're seeing prices are now the strongest, and that's the first time in many years that's happened. Clearly, buyers are looking to this more affordable part of the country. Sales down in the South and West, where they had been most competitive. The realtors are now predicting total sales this year will be about 13% lower than last year, but will begin to rise again next year. Back to you guys.
All right, thank you very much, Diana Olick. And of course, a big piece of the housing puzzle is what the Fed has been doing with interest rates, and those higher mortgage rates really helping to reinforce the supply-demand dynamic, which is helping prop up prices here in the housing market. Relatively strong, even though, you know, we may have seen the bottom of that cycle.
Yep.
Very shallow in terms of that pullback.
Yeah. You know, we also got some numbers this morning as well, and we got...
This Tupperware stock still absolutely flying. It's up at 250 now. You go back a few days and we were sitting at 60 cents. So holding this move quite well. We did pull back really nice, and I'll quickly throw it on the screen, off the first deviation. So we'll see how we react at this second one, but we did get that nice pullback on there. So we'll see if we can get that same reaction on this one. Again, if we do break it, then our next level is going to be 320.
Boost off of the report from Meta. It's reinforcing the notion that ad spending is rebounding, that those core sort of business advertising-driven revenues may have seen the trough and may be really showing an inflection point going to the second half of the year, and that's really optimistic. Also for Amazon, which is yet to report for earnings, its earnings. That's positive news.
Well, these big platforms in particular, yeah. Alphabet, right. Meta, just seem to be taking all the advertising. I mean, obviously, sure, Snap seemed to have a hard time. We know what we call traditional media or old media has still been somewhat challenging. Comcast obviously having a very strong morning, but Mike Cavanaugh, the company's president, on the conference call talking about it's still a challenging environment for ads there, but not so, to your point, for Meta, and not so for Alphabet, both of which seem to be, interestingly, both put up also 29% operating margin for their quarter, with significant revenue gains for Meta, of course.
That is an extraordinary move for Comcast in a single day, percentage-wise.
It is. You don't see that too often.
We follow this stock very closely.
For obvious reasons.
We're shareholders,
the only stock
stakeholders.
The only stock we can own. Typically, you come in and then they say something on the call that actually gets people upset. Not the case this time. They got through the call, and in fact, there's real momentum. It was the bottom line there in particular, Melissa, for Comcast, I think, that encouraged people. The adjusted EBITDA numbers up 4.2%. The ability, even with not really a lot of top-line growth, to deliver significant bottom-line growth, not to mention, of course, continued return of capital to shareholders, and the free cash flow numbers looking quite strong.
Exactly.
OSTK starting to show a bit of intraday weakness now. So ideally, I want to see that next leg up. Should start seeing that. We're seeing it on weaker volume. Hopefully we'll see it on a bit of weaker momentum. And then I might start looking at it short. I will probably look to play it through covered stock. Let me just make sure shares are still available to short. Yep, it's still easy to borrow. So I'm probably going to look through the route of covered stock. The reason I say that is because, firstly, the option prices are going to be elevated. So no matter how we trade it, unless we do covered stock, we're going to kind of struggle a bit. But if we go through the covered stock, the way I'm going to look to trade it is look for, a 4 or 5 point pullback in the shares, lock in the profits on the shares, and then potentially hold that call in anticipation of a bit of a bounce off a key level. Am I missing something? Core inflation is still going upwards, albeit a bit slower rate. Is it still far off the 2%? It's still, yeah, mate, we're miles off the 2% target. Again, he was saying, Jerome Powell said yesterday on the conference, he doesn't think we'll get there. I think it was 2025. So we'll still probably be quite a while, till we come back down to the 2% target, really. Why is the economic outlook so positive? I wouldn't even necessarily say it's super positive. I think it's just not as bad as everyone was kind of predicting. You go back a year or two, everyone was thinking we are going to have this massive recession. Not probably as bad as 08, but that kind of thing is what everyone was forecasting. We're actually coping a lot better with it. Obviously, inflation is high, but everything else is staying quite stable. The housing market is staying strong. So seeing the strength in areas like that, I guess, is just keeping more people, I would say, not even positive, but more... Yeah, I don't know. I wouldn't say they're so much positive. It's just now they're not as negative is how I'd be looking more at it. At least that's what I'm taking a lot from it. It just seems more... It's not as doom and gloom as it once looked. Is how at least I'm looking at it. But again, definitely, I wouldn't say something to be extremely positive over, especially like Jerome Powell said yesterday, if we're not going to come down to that target rate for until, another year and a half, 2025, that still means we're staying, well, firstly, we're always going to be staying at these elevated levels of inflation. By that, I mean, you go in the supermarket, say your bread was 50 cents, it's now $1. That's not going down. That will stay like that. It's just now the rate of it will slow. So we still need the other, job markets and stuff like that to catch up. While inflation can still be tapered. So I would still say 2025 is still quite optimistic. And I think that's what we've been seeing them be recently. They have been optimistic and then it ends up taking longer. So I wouldn't be surprised if we wait in 2026, maybe even 2027 for us to be properly back to a somewhat normal.
Let's talk about the stock a bit more. I mean, I had one investor, obviously, who's quite bullish, say they could do as much as $20 a share in earnings next year. I don't know where you are on that.
Just to note as well, it looks like we're trying to push those lows now on the euro dollar. This is again after the ECB conference. Also seeing the SPY now break its intraday lows, pushing down. We're seeing the futures, so the ES futures touch its VWAP, so potential support, but I'm always paying more attention to those anchored VWAPs. So we need quite a fall in price to come and hit those. But again, basically everything across the board is looking quite weak. Meta obviously is one of the things really holding the market up. Basically just consolidating though. You're not really seeing strength on the open. So we'll see how we can start reacting on this. But if the market starts pulling back, it's only time until Meta gives in. We saw this not yesterday, the day before on Google, where it would, or it might have been yesterday. I think it was yesterday actually, where whole market was pulling back. Google's holding, but not really able to push up all that well. And then you give it about 12 o'clock and it just fades with the market. It's not much they can really do.
About this, there's nothing to disappoint on in terms of those expectations. But how do you sort of think about that in your model?
Yeah, I mean, clearly we have increased costs, as a result, the investments and the infrastructure we just got through, like CapEx, and CapEx is going up next year. By the way, Meta invested quite heavily in CapEx last year, which sets the stage for where we're going. But from a top line perspective, we look at AI and the opportunity within online advertising in multiple different ways. Not only can it help create ads at a much faster cadence.
Also, Cavana's still weak, down 5.5% today. Potentially could crack back below that $40 mark today.
You're seeing AI come through potentially via bots and agents. And one of the things that really struck me yesterday was a commentary around click to message and click to WhatsApp, where now it seems as if a barrier is lowered, where your 200 million plus SMBs on WhatsApp could potentially target and converse one-on-one with every of the 3+ close to 4 billion users on Meta overall. That's awfully powerful. And so when we think about AI, that's on the come, that's an opportunity, but it'll come through with an advertising product and engagement that we're seeing. So there's a few ways that we're seeing AI come through in Meta: engagement, advertising, of course, efficiencies, and frankly, when we're looking at 15-16% growth next year, if AI can do what we think it can do, then I think you can have sustained growth going forward.
Ronald, thanks. Appreciate it. Ronald Josie, Citi. And do not miss Meta's CFO. That's coming next hour on Squawk on the Street.
In the meantime, we have some fresh news when it comes to the banking industry. And for that, we'll go over to Leslie Picker, who has the details. Leslie.
Hey, David, regulators unveiling proposed rulemaking that raises capital requirements and expands the scope of banks subject to some of the strictest rules. In more than 1,000 pages, the Fed, the FDIC, and the Office of the Comptroller of the Currency are seeking to revise the capital framework. That's essentially the formula for assessing the riskiness of each firm to determine a new, in many cases, higher buffer to protect against.
Bonds definitely looking a lot more weaker than the currency now, because we still have the bonds basically near the lows and are at the lows. Whereas on the euro dollar, it's still near the lows, but this is still where we were at the end of the conference. So where we were, for 30 minutes ago.
Meet these new requirements. A big change, though, if these rules are implemented, would involve the way that riskiness is calculated. Regulators are proposing that banks scrap their internal models in lieu of a new standardized one for risk-weighted assets, as well as an expanded one that includes 4 elements: credit risk, market risk, operation risk, and credit value adjustment risk. That's essentially losses on certain derivative contracts. The proposal also includes several elements in response to the recent turmoil in March and April, expanding the scope of certain regulations to include mid-sized banks with assets as low as $100 billion. These changes would require these smaller firms to include unrealized gains and losses on available for sale securities and regulatory capital. Remember, this was an issue with Silicon Valley Bank before its failure and led to some concerns and some confidence issues there. None of this, though, would go into effect immediately. There's a comment period through the end of November. I'm told banks and their lobbyists have been gearing up for quite some time to push back on what they expect will be strict.
What, BBIG going higher than GME? If it does, it will kind of be that same thing. Again, people keep coming in the chat to talk about BBIG. To me, again, if you're very bullish on these kind of things, I'm probably not the first person to be watching, because I'm not. To me, they're short bias plays. Basically like what we caught. First time we hit that 517, we caught that short bias. As we push higher, or if we push higher, then to me, these are just short bias levels. I'm looking at the 670, about the $10, $13 and $15. It's basically just all short bias levels if we come into each of these. because again, I think any move above these is really just going to be short-lived, and we can just look to play the downside. But again, that's how I'm looking at it. I know obviously some people are looking at the potential move to the upside.
Change the dynamic in terms of the amount of capital they do return to shareholders. It could, and this is something that the banking lobby will likely be very vocal on, it could impact their willingness to lend. That could crimp, credit availability in our economic system. That, of course, is the bank perspective on, just overall holding more capital and those requirements. And so expect to see a lot more fireworks. It's called the end game, but I think we're just at the beginning.
Thank you, Leslie. And thank you, David, for putting into perspective. 2025 is the end game. 2028 is actually the end game because they have the 3 years to implement it.
That's correct.
Yeah.
That's correct. It's like Mission Impossible. It never really ends. Just they keep coming. This is really the end game.
Exactly. All right, let's get to our roadmap here for the rest of the hour. Today marks the busiest day of earnings this quarter from McDonald's to Southwest. What investors need to know.
Plus, the consumer seemingly remaining strong. That's at least according to Hertz. We're going to break things down with that company's CEO. Shares are down, though, on the quarterly numbers.
And finally, the Fed hiking rates to levels last seen in 2001. Could they go even higher from here? Former Atlanta Fed President Dennis Lockhart will join us with his take later this hour. Big show still ahead. Stay with us.
I've been working day and night. If I had money, you're my type. Still taste you like I'm sipping my Thai. I don't talk too much, but I got a lot to say. A lot on my mind, let me demonstrate. Some things I can't explain.
He's still pushing up about 9% as of right now. Again, this is holding off the earnings move from yesterday. We do have some key levels. 223 is the closest one. So if we can push the high, which it potentially looks like it will redo, can potentially look to trade that short bias. We'd have to probably look at the options though, because it is hard to borrow.
Cheap, gotta show me. That's nothing, no. That's nothing, no. Think about this crazy life. I've been working day and night. If I had money, you're my type. Still taste you like I'm sipping my Thai. I don't talk too much, but I got a lot to say. A lot on my mind, let me demonstrate. Some things I can't explain. Some things I can't explain.
Uber also moving a bit today, so if you're liking the look of the small caps, it's one I'm potentially looking at. 294 is going to be that key resistance.
Some things I can't explain.
Also looking at NEO as a potential swing short. We keep kind of getting these pullback days, so to me I think it will end up being a 1 day, well, not a day trade, but I'll get looking out to get out basically the next day, because that's what we kind of keep seeing. So we have the next key level at $14.50. So pre-market hit 14.17. So if we end up retesting that, breaking that high, we'll potentially look to trade that again. I'll probably be looking to covered stock on this as well. I can jump out the shares and hold that call for potentially that second leg up.
Hertz shares, as you see right there, down a little less than 5%. As second quarter revenue did fall short of estimates. That's despite an increase in utilization rates and increased demand as summer travel continues to boom. CEO Stephen Scher joins us now. He's going to break down the quarter, answer a few more questions than that. It's good to see you, Stephen. Let's start off on the outlook, which seems to be quite positive. I mean, on the call you said, on rate for the balance of 2023 is for year-over-year comparisons to improve, sequential uptick in both rate and demand into Q3. So what are you seeing that gives you a more positive outlook for the second half of the year?
Well, good to be with you, David. I mean, what we're seeing is just continued strength in demand, and it's not just here in the U.S., it's equally in Europe. Part of that is a function of greater confidence among the consumer. You heard it yesterday in some of the Fed discussion, disinflation and the consumer sort of playing strong. And so we continue to see considerable demand, such that this doesn't appear to be kind of a momentary surge or a revenge, if you will, coming out of COVID. There's something that feels a bit more permanent to this. We're seeing it across many of the airlines, and I think there's more to come. We're not yet back to international travel to pre-pandemic levels, and business is not yet back to where it was. And so, notwithstanding elevated demand and a forward view on demand, there's more to come in the context of what's available to us.
All right, well, specific question from your investor base then. I think the expectation is EBITDA next year will be lower than this year. Correct me if I'm wrong, but you seem to be indicating that you could see EBITDA growth.
No, I think we could see and likely will see EBITDA growth into 2024. That's based in some measure on stability in the base business, but equally, we are pursuing a number of areas of growth to take the business up and broader, including, as you know, renting cars to rideshare drivers like Uber and Lyft, doing that both in the US and in Europe. We're bringing new life to a value brand that we've owned for a while called Dollar that I think can compete well. We'll use lower depreciating cars, less expensive cars, and be able to charge affordable rate for that very large addressable market. And then our European business, as I mentioned, that's been in restructuring. We've taken considerable cost out. All of our countries in Europe are proving profitable, and there's considerable business to be had there.
What is your base case scenario for the economy, Stephen, in order to give these financial forecasts?
Well, I think the base case is that we see stability. We're not looking for expansive growth, nor are we, looking for a reversal in the context of rate cut or the like. Stability and increasing confidence, will materialize in increasing demand and business for us. It's interesting, but, the rental car company is kind of on the tail end of a decision that's being made around travel, meaning a customer is deciding to go on a vacation or not because the rate on the car is $5 or $10 higher or lower. There are other larger inputs to that decision. Similarly, a business trip is decided not on whether the rental car is expensive or cheap. And so we are riding kind of broader economic trends and levels of confidence that are in the economy, much of which we are seeing, expressed not just in our company or in the rental car space, with very, very high utilization into the mid-80s, meaning 85-ish% of our cars are on rent on any given day. But we're seeing that play out in capacity on the airlines and in the hotels.
When it comes to EVs in general, you talk about having a first mover advantage in terms of fleet management. Stephen, I wanted to get you to explain to us, when you talk about being better positioned long term for managing electric fleets for others, what are you talking about?
Well, think about small and mid-sized businesses who, over the next couple of years, will likely skew to, trucks or vans that are electric. And I'm not talking necessarily about Amazon or Verizon or the like, but just think about the plumber, the electrician, the baker, all of whom has 3 or 4 or 5 trucks. These are going to need to be managed. Knowing how to manage a fleet, how to move fleet around, how to charge a fleet, how to manage an electric fleet are essential elements if we're going to find ourselves longer term in a place to engage in fleet management. And I think that's an important opportunity, set for us as we look forward.
Stephen, you're also, continuing to cut costs. I think talked about $30 million on an annualized basis through attrition and reduction in force. I asked the question because there are some people who have also asked me, well, God, he's cutting costs, but, he came in as number 3 in terms of overall comp. Can you explain your comp? Because I know so much of it, of the $182 million, actually is stock. But to those who say, wait a second, this guy's cutting jobs at the same time, that number is staggering for a $5 billion market cap company.
Well, my compensation is structured such that my interests and those of our employees and equally those of our shareholders, importantly, are all completely aligned. Those are very large numbers, but they will come to the extent that we as a company deliver on forward value for the business and for our shareholders. And so, those numbers are achievable at points at which both shareholders and employees have enjoyed and will enjoy the benefits of a big, bold, and growing company. And so I know where the headline figures are and how, various tables are assembled, but make no mistake, my interests and theirs are completely aligned, and I only make that kind of compensation to the extent that we are successful, and I believe we will be, in the forward path of Hertz.
All right. Now, I can't go to a lot and rent one of those cars behind you, can I? You're not going to let me drive that thing, right? That yellow thing there, Steve?
No, David, I'm not sure we'd let you into that gold race car, which raced at 24 Hours of Le Mans. But we'll put you in some other very cool, very heady cars.
Yeah, I'm a long-time customer.
Malibu or something.
Yeah, I go more for the big stuff. Stephen, thank you for the update. Always appreciate it. Nice to see you.
Great to be with you.
Still ahead, McDonald's in the green while Chipotle slumps. Find out why after the break. Squawk on the Street returns right after this.
Eastern.
McDonald's and Chipotle on the move after results from both names. Let's get to Kate Rogers. She's got all the numbers. Kate.
Off with Chipotle down around 9% this morning after reporting a beat on earnings but a slight miss on revenue, which has been a trend over several of the last few quarters. Same-store sales also a slight miss for the quarter. CEO Brian Niccol calling out the resilience of the consumer once again on both the high and low income ends. He says traffic has continued to grow and there's more room to run on that as the company seeks to improve throughput in its restaurants with some tweaks to staffing for in-restaurant and digital orders during peak times. Now, the company's also installed these double-sided grills in 10 locations that speed up steak and chicken prep for workers, and it's testing out some automation to alleviate repetitive tasks for its employees. Now, McDonald's out with a beat on the top and bottom lines this morning and a beat across the board on same-store sales. Its international same-store sales showing even more strength than the U.S. with a bigger beat there. U.S. comps up 10.3%. That was thanks to menu price hikes and the viral success of bringing back the Grimace meal, which CEO Chris Kemchinski said garnered 3 billion views on TikTok. He added that sentiment has been improving a bit for the U.S. consumer, but added things are far off from where they were back in 2019. McDonald's says it's gaining share at incomes under $100,000 a year, getting some benefit from trade down from full service and casual dining. And for those under $45,000 annually and less, they're seeing a decrease in order size, but that's also being offset by strength in traffic. So perhaps people are ordering a bit less, but continuing to come into its restaurants, which of course is very good news for McDonald's. Guys, back over to you.
Kate, the theme, for both of these declining costs, I mean, chicken, pork, cheese, avocado prices all coming down, and that's certainly helping. And yet price hikes are still not off the table, at least at Chipotle. It sounded like Nickel didn't really want to go there, but it is still an option because they have some room to hike prices. What are the costs that are still remaining very high or are going higher?
So Chipotle talked about some low-grade inflation, particularly in wages. And again, remember, it has a very high ticket item in steak on its menu that's featured quite heavily. They had some offset, Melissa, this quarter with the chicken al pastor. I think Nickel said that kind of showed up in 1 in every 5 transactions. Chicken's a bit lower cost, but Chipotle, I think, will end around 5% pricing in this quarter, it said, and expects that low-grade inflation to continue through the back half of the year. But Nickel said if they have to dial back pricing, they can. They're not quite ready to do it yet. McDonald's did talk about inflation coming down a bit in the back half of the year. So two similar but slightly different forecasts from the companies, but neither really moving on pricing and neither saying there's much weakness in the consumer this quarter.
All right. Kate, thanks. Kate Rogers.
Thank you.
The Fed hiking interest rates, of course, highest levels we've seen since 2001, not stopping the markets as the Dow, in fact, tries to notch what would be its longest win streak since, it says 1897.
That's right.
I'm going with it.
Dom said that yesterday. I was shocked.
Yeah, 1897. Even Jim Cramer doesn't remember that far back. Former Atlanta Fed President Dennis Larcott joins us to break things down. Don't go anywhere. We're back in 2.
What you see, BBIG going to $100 plus, and some just have no clue on what's going on. Oh, that's loud. You'll see 10, 20, and 50 miss out. It's just like they did on GameStop. Again, but if you're playing those kind of moves, it is a gamble at the end of the day. Because if you're relying on a move like that, you are relying on a short squeeze, and that there's so many institutional holding that they all get squeezed out. So obviously there's always a possibility, but to me, how I trade it, I'd rather miss out than 9 times out of 10 take that gamble and lose all your money. So to me, it's not something I like to trade. I'll be trading it, I'll just be trading the other side of it. But again, it's got defined risk. So, if you want to trade it long bias, it's great. People who want to trade it short bias, again, as long as you're defining your risk, who cares? You can short the shares, buy the calls. So even if it did go up to $100, you're not going to lose any more than if it went to, say, $10. So that's how I'm looking at trading it anyway.
Welcome back to Squawk on the
Street. I'm Bertha Coombs with your CNBC News update. Members of the federal grand jury hearing evidence and testimony into the January 6th riot at the Capitol and efforts to overturn the 2020 election convened this morning at a D.C. courthouse. 3 sources in Trump's inner circle told NBC News his legal and political teams are preparing for the possibility that the grand jury will vote on charges against the former.
Big move on Citi, up 3%.
London
Seems to be on an expiry or an Australian option.
Sinead O'Connor's death is not being treated as suspicious. According to police, officers were called to a home Wednesday morning where they found the 56-year-old had died. And more than 40% of Americans are dealing with extreme heat today. 140 million Americans are under heat alerts from coast to coast. The biggest electrical grid operator in the country, PJM Interconnection, issued its own level 1 alert today because demand for power is expected to soar as people crank up their air conditioners trying to stay cool. Guys, David, I got to imagine it's a good reason to go to the movies, even, to sit through like a 3-hour film like Oppenheimer just to stay cool.
I've already seen it once, but I might go back. That's actually not a bad idea, Bertha. Yeah, it's very warm today here in downtown Manhattan. Bertha, thank you. If you haven't heard, the Fed hiked rates yesterday, 25 basis points. That takes them to the highest level they've seen in 22 years. Data this morning, though, showing surprising resilience to those rate hikes. Let's get over to Steve Leisman, who can explain.
Also, just to note, key levels on Citi after this big move. We actually have hit the first one at 49.10. That's a 6-month first deviation. And at 49.50, that's our first deviation on the 1 year. So if we continue up, that's what I'm paying attention to in Citi.
Jobs and business.
To me, not swing levels, day trade only, because it's the first deviations. However, Citi has been range bound, so we could do a swing trade. I just won't have massive size because it's not the further out deviations.
And the estimate claims 221, down from 228, lower than the estimate. Continuing claims won't go up, which means there's people who are losing their jobs, filing claims, seem to be getting work on the other side. Durable goods shows in business investment is higher, 4.7, up from a revised upward 2%. Over capital economics, they're riding the 2.4% annualized gain in second quarter real GDP growth, which means the economy expanded at close to its potential pace over the first half of the year, suggests that higher interest rates are having remarkably little impact. As Fed Chair Jay Powell said yesterday, the Fed staff no longer forecasting recession, with concerns receding about bank credit tightening. Powell yesterday came out squarely in the middle on future hikes, not tipping his hand either way from what I could gauge about what the Fed's next move would be. Here are the probabilities in the market after the numbers today. Probability of a rate hike in September, 24%, 40% for November, so not quite at half. They're still undecided, the market is. And then May 24th, so 61% probability of a rate cut built in. Importantly, the GDP report showing inflation kicking down, so it does seem as if there is some impact to those higher rates and that the economy can both grow at trend and inflation can fall. Nice mix right there. The Fed is going to watch, wait, and react to future inflation reports.
Tilray on the highs as well. Remember, key level at, is it 223?
For this big upside surprise we got today. David?
Yeah, Steve, I don't know. I mean, I guess just for me, I want to get your take on yesterday and what we heard. It didn't seem as though there was anything particularly unexpected, but I want to make sure.
No, I mean, I thought the part about the Fed staff backing off the recession, you could sort of expect that, given that we have not seen the worst outcomes that were expected or feared from the bank issues we had in March. I thought that Powell also leaning a little bit more heavily into the slow or the soft landing idea. That was interesting to me. And what was interesting to me also this morning was that Lagarde and Powell sound very similar. They're all in this sort of data dependence. We're out of a forward guidance mode. They're not telling us what's going to happen. And so the market's just going to have to take each piece of incoming data, put it into the model, and whatever it spits out, bet that way. But I don't think you should write off a quarter. I don't think you should write it in. I think we all need to wait for the data. Honestly, I think if Powell had a leaning or a sense of what exactly he would do, he would tell us. The only difference here is that we know he has a fairly hawkish committee. 2/3 of them had built in that second hike this year. And then we'll get to talk to a lot of them in Jackson Hole, David, and we'll ask them, is that second hike still on?
All right, Steve, thank you. Steve Leisman. Let's continue this conversation with former Atlanta Fed President Dennis Lockhart. Dennis, always good to see you. Always good to get your take on the Fed here and what they are telegraphing. What do you think they are telegraphing? Is there anything below the surface, or is it really the message that each meeting is live and we're just going to see what the data tells us?
I think that's the message. I don't think they're telegraphing much at all.
Also, just a heads up, at 11 a.m., we do have Meta's CFO coming live on CNBC, so the news we have playing right now. So yeah, we should be seeing her come on at 11 a.m.
Said a second ago. Powell repeated his mantra, which is we're getting used to now. It's meeting by meeting, data dependent.
Also, the fearing index have dropped. So the fearing index for the stock market is at 82%, or 82 out of 100. That's extreme greed, up 1 from yesterday. Crypto fear and greed index at 51 out of 100, just neutral.
Anybody's thinking on the committee as to where this is going to go.
When we think about the markets and pricing in a rate cut in May, 60% chance of a 25 basis point cut next May, how should we think about that? Should we think about the economy turning south, therefore needing some easing, or do we think about that in terms of, the inflation target is close, and so they're going to go less restrictive?
Well, I don't know exactly what to take from.
Bonds and the euro pushing the lows means dollars at the high. Seeing a bit of a temporary pullback on the S&P though.
If you will, or at least a recognition that getting inflation down to 2% is likely to take some time. I think he projected 2025 in his comments, and he also certainly did not give any indication that they will move before they're pretty convinced that they're on a track to that 2025 achievement of their goal. And then another aspect of this, I think, is that he, in so many words, acknowledged that the last mile, that's the term that's being used these days, the last mile is going to be more difficult than the progress made on inflation to date. So when I add all of that up, it just seems to me a May cut is wishful thinking to some extent.
Well, Dennis, I'm curious then what that last mile looks like and why it's perhaps more difficult. Can you explain to our viewers what the challenges are?
Well, in numbers terms, I would think of it as getting from a 3% run rate down.
Also forgot to actually talk about it on stream. The natural gas change came in at 16 billion. The forecast was 14.
Inflation indicator. So what they take from that synthesis is essentially what's the underlying pace of inflation. And if that's around 3% and they want to get to 2%, that's the challenge. Now, why is that difficult? Well, it could be because we have some quasi-structural elements at work in our economy that, for example, chronic mismatch of labor demand and supply, which is going to continue to put some
and again,
pressure on
the weekly net gas
wages
has dropped. Again, basically just staying very seasonal as we expect. And here's just a quick run in the numbers.
Part of that last mile you mentioned was wage pressures, and I'm wondering if we can see that ease if the labor market remains firm. If 3.6% unemployment, if that's really sticky and is hard to budge, Dennis, are we still going to be faced with wage pressures?
Well, there are indications of it softening, and so I think you can go too far in describing this mismatch of demand and supply in the labor markets. So it looks like it's beginning to settle down. But I just raised the point that for a variety of reasons, including demographics, some maybe swings in participation, it could be that we continue to see wage pressures. You're correct that as of now, it does appear to be rebalancing. Situation appears to be rebalancing, and so I think there's hope there. But getting from 3 to 2%, I am sympathetic to the view that that's not going to be nearly as easy as getting from 9% to whatever is today's run rate of core, so 4.5.
Dennis, thank you. Always nice to see you. Dennis Lockhart.
As we head to a break, check out the biggest gainers on the S&P so far this morning, led by Align Technology. These are all earnings related, of course. We heard Jim in the last hour talking about Textron and Lam Research as well, both of which are having strong gains. Meta giving up a bit, but still up well over 7%. We're back right after this.
Memories keep me frozen, looking past in the moments. None of them seem to notice. Splinters in my heart, suffer among the silence, vulnerable to the violence, deafening voice of silence. Splinters in my heart. Memories keep me frozen, looking past in the moments. None of them seem to notice. Splinters in my heart, suffer among the silence, vulnerable to the violence, deafening voice of silence. Splinters in my heart.
This morning after warning of higher costs and softer pricing. Phil LeBeau has been tracking the action, joined us now with more on the quarter. Phil.
Yeah, Melissa, investors are really taking shares of love out to the woodshed, and this is less about the second quarter, which was largely in line with expectations. Yes, they missed the bottom line by a penny, but the revenue was better than expected. This is about what the guidance was for the third quarter and then for next year. And for the third quarter, two things stand out. Revenue per available seat mile is expected to be down 3 to 7%. The street's at 1.5%, 2% was the expectation for a decline, so worse than the street was expecting. Cost per seat mile up 3.5 to 6.5%. Some of that is fleet maintenance, some of that is labor costs. Here's CEO Bob Jordan talking about the pressure they're going to be feeling in the third quarter.
A lot of it is just as we restore our network and as we get all of our aircraft flying. I'm really proud to say that we'll get that done in the third quarter. That extra capacity is sort of atypical sequentially from second to third. So it's the extra capacity really putting some pressure on RASM here into the third quarter.
It may be atypical, but it is not what the investors are expecting in terms of, the capacity coming back. But the bottom line is this. The revenue per available seat mile is softer than what investors were expecting. Take a look at the difference between Southwest and the airline index, and you see that Southwest has been struggling over the last year. We know about the issues at the end of last year, Melissa. Bottom line is this. This conference call, when it comes up with analysts a little later on this morning, there's going to be much more detailed questions about the revenue and the softness, because Bob Jordan told us on Squawk Box they still see strong demand for the third quarter. So if they're seeing strong demand, the issue becomes one of, okay, how is the network set up and why is it not being optimized?
Good questions. Phil, thank you. Phil LeBeau. Still ahead, Honeywell, the biggest laggard on the Dow this morning, despite beating estimates and raising guidance. We'll break down the numbers with new CEO Vimal Kapur, his first broadcast interview since taking the helm. Next hour, it all kicks off at 11. Stay with us.
Memories keep me frozen, looking past in the moments. None of them seem to notice. Splinters in my heart, suffer among the silence, vulnerable to the violence, deafening voice of silence. Splinters in my heart. Memories keep me frozen, looking past in the moment.
Let's check in on the markets here as we close out this hour. S&P up by about 0.5%. The Dow, though, is really in focus today. And the Dow is on pace for its longest winning streak since 1897, 14 straight days of wins. That is extraordinary. Let's bring in Bob Pisani with more. And I'm sure that you don't remember 1897 either.
GE was the only one of the 12 Dow Industrials that was there at the time in 1897. Yeah, and that was the year we started the big mergers that were happening, the consolidations. You know, Standard Oil and all those things started happening in the next few years. So it was a big run. We don't want to hear all of this, though. We want to hear about what's going on right now. So take a look. The broadening out story is very real, but you wouldn't know that today because it's all the old stalwarts. Remember the leadership group, communications services today? Of course, that's Meta, Comcast, Alphabet, dragging that whole sector. Great news and great story from them. Tech is great. Lam Research had great numbers, raised the guidance. Consumer discretionary. Did you see Royal Caribbean? They just killed it. New high. It's up about 6%. Great bookings. Energies was the new leadership group, Energy Materials. That's also moving ahead a little bit here. So people keep messaging me, gee, Bob, why are we up 13 days in a row in the Dow Jones Industrial Average? This is kind of silly, isn't it? Well, look, we generally had better than expected earnings. There are a few misses, but generally better than expected. The soft landing has become the consensus. Did you see the economic numbers this morning? My heavens, durable goods were great. The jobless claims numbers were strong here. FOMO is still out there. And this broadening out story we keep talking about is finally actually working. The simple way to look at it is the equal weight S&P 500, the RSP, is finally just barely outperforming the market cap weighted S&P this month. Only this month, not on the year. It's only half as good in the year, but it's finally actually working. And this means material stocks, energy stocks, healthcare, all doing a little bit better than expected. The headwinds are there. We keep talking about the high valuations. That is not preventing the market from going forward. Oversold conditions, not preventing the market from going forward. Seasonal weakness, yes, not preventing the market from going forward. Earnings, people keep saying, you're not going to be able to move them forward, Bob, because it's going to be too hard with the prices this high to move the market higher. Well, wrong on this theory. Look at the numbers here for today. We are 40% done here. 219 companies reporting. This includes the numbers this morning. 80% are beating. That's a little higher than expectations. Here's what impresses me. The average beat is almost 6%. Now, you have to go back prior to COVID. Normally, the beats were 3 or 4%. So if you go back and look at the old numbers before COVID distorted everything, this is much better than normal on the beat. Revenues are a little light, the beats, because they're having trouble raising prices here. But overall, if you look at the new high list, well, heavens, the new high list looks like the companies that reported today. Comcast, Meta, Lam Research, Boeing reported yesterday, but there you go on the new high list. Finally, I just want to mention something today. We're getting a direct listing today, something we haven't seen in a very, very long time. This is Surf Air Mobility. It's a regional aircraft mobility platform, electrified. We've got a reference price of $20. Remember, what happens here, there's no shares that are created. Essentially, the shareholders are putting their shares on the market. There'll be a certain number available for people to trade, and we'll be waiting for that to open in a little while. But the key point here is...
Well, it's not a capital raising exercise.
That's right. There's no new shares, and that's why it's
no new money. Right.
There's no new shares and no money being raised here. So existing shareholders are putting their shares on the market. We have a reference price of $20. It'll be over there. I'll go take a look, but I don't anticipate that'll open for another hour or so.
You know, you talk about the outperformance, or at least the equal weighted S&P. But I mean, today the Nasdaq's up twice what the S&P is. It's off, though. We've been coming down the last half hour or so. We've sort of off our highs. But generally, we've had a very, driven by all the big names, Bob, today.
Right. And so remember, the broadening out story is based on the idea that it's going to be hard to push valuations higher on technology stocks, given the run that we've had this year. It is now happening that we're not only getting broadening out, but even the technology stocks are continuing to move higher. So just because the valuations are high doesn't mean they can't go higher.
Take a look like a Meta or an Alphabet. I mean, those valuations, McDonald's has a higher forward PE than either of them.
But look what happened last year. That's because of what happened last year to Meta. So it's still in a way playing catch up. There may not be as many believers,
but the multiple for Meta is still below the market multiple, which is, again, but it's still up 7%, down from what it had been. But I mean, the Nasdaq's up almost 37% this year.
Yeah, I mean, the most important thing is the idea that you can't go higher anymore because of a certain price limit doesn't mean anything anymore. Not in an up market.
Right. Bob, thanks.
Okay.
Bob Pisani. That does it for this hour of Squawk on the Street. Don't go anywhere, though. We got another big hour coming your way.
Splinters in my heart. Suffer among the silence, vulnerable to violence, deafening voice of silence, splinters in my heart. Splinters in my heart. Memories keep me frozen.
Some ECB policymakers currently favor September rate hike. Others eye pause.
Memories keep me frozen, looking past in the moments. None of them seem to notice. Splinters in my heart, suffer among the silence, vulnerable to the violence, deafening voice of silence. Splinters in my heart.
Live from Post 9 of the New York Stock Exchange. Ahead, a C-suite triple play. First, the CEO of Honeywell joins us in an earnings exclusive. Revenue coming in shy of expectations, but the industrial giant lifting its forecast as its aerospace business continues to soar.
Plus, Meta's chief financial officer, her first interview since taking on that role. This says that stock surges on strong revenues and boosted guidance.
And later, the Taylor Morrison CEO is with us on their own quarterly results and a pulse check on the housing market.
First, though, let's give you a quick check on the stock market. NASDAQ well off its highs of the morning, but you can see still the outperformer there, up almost 1%, driven by those Meta earnings, amongst other things. The Dow, as Melissa's told us, looking for what, it's 14 days?
14.
First time since 1897. And there's the broader market up 0.5%.
The move higher in the markets coming in the back of yesterday's widely expected rate hike. The question investors are asking themselves today is, what's next? Barclays and Bank of America see one more hike on the horizon, but the majority of the street, including Wells Fargo and Goldman Sachs, say the Fed is now done tightening and this will be the last hike of the cycle. That's as the economy shows signs of resilience with a strong Q2 GDP number of 2.4% just this morning. Joining us now, Strategas Research Partners CEO Jason Trenner. Jason, great to have you with us.
Great to be here.
You say the market's overbought. Why is it overbought?
I think it's overbought mainly because of valuations. And of course, markets can stay overbought a lot longer than they can stay oversold. Usually that resolves itself pretty quickly. But it's really hard, even if you look at the most optimistic expectations for earnings next year and you put a 20 multiple on that, you would say that the market is not particularly cheap. So, but valuation is not a particularly good timing tool. And, it seems like the path of least resistance for the market is higher from here.
So what would you say to investors? I mean, you say that markets can remain overbought for quite a long time. The risk rewards are dwindling at this point with markets where they are. So do you sit it out at this right now?
I certainly wouldn't put a lot of fresh money to work, and I wouldn't put a lot of fresh money to work in the parts of the market like tech and communications that have been up the most. I mean, I think you're not, I don't know if you're really getting paid for any sort of the potential risks there now. There does seem to be some rotation towards energy, some of the financials, which I think is good for the overall market. To me, those look, a lot more exciting or attractive just because they've sat out a good portion of this rally, at least this year.
Jason, you're not alone in terms of being less constructive on the market. There are quite a few strategists, I think, who've been somewhat surprised at the strength of this rally. But what, looking at this year at the beginning, what is it now, more than halfway through, that you sort of think, well, geez, I didn't anticipate that?
Yeah,
how does that color your view?
No, it's a great question. So, because we're actually doing this for tomorrow, it's two things I would say. One is that the profit margins have come down, but not enough to force companies to lay off workers as we thought. So you still have 10 million job openings out there. So the labor market's still tight as a drum. And even though there were some signs of claims moving up and all the rest of it, the labor market has come kind of roaring back. So that's one thing. The other thing I would mention is that, believe it or not, the S&P 500 was essentially flat the day before Silicon Valley Bank failed. It was up 58 basis points year to date at that point. At that point, the Fed stopped quantitative tightening. It actually added money to its balance sheet, and then you just took off. So that was kind of the pause. That was almost the deke, if you will, like, or, you know, in the coverage where a lot of people were kind of expected the market to slow down or fall, but that was actually just what the market needed, and the market hasn't looked back since. So those are two big things, I would say.
But not enough to push you off of where you stand, which I'm sure is hard when you're grinding higher, as we do almost every day.
Yeah, sure. And again, you know, you don't want to. Discretion is a better part of valor, right? I mean, you have to take, you know, play the ball as it lies. Market's moving higher. I don't think there's a lot of value in the market at these levels, but you have to kind of take what the market gives you, and that's why I would say I'm looking at some of the other sectors that haven't participated as much in the rally for some opportunities. I think that's the way to play it.
Also, what happened at the beginning of the year is this whole AI theme that came about, which is theoretically accretive at some point during. It puts out there a reason for growth for the tech stocks. And some of those tech stocks do not have stretched valuations compared to the market.
Well, it's, you know, so if you talk about the Magnificent Seven, right?
Which I hate that term.
So Ford is reporting that earnings per share of 54 cents is expected. That's down 20% year on year. Revenue expected of 41.3 billion, which is actually up 8.9% year on year. Anyway, we are going to end the stream here. Hope you enjoyed. Hope to see you next one. And that's it. Peace.